Good morning, traders. Today is 18th of January. My name is Neville Hornsey, market and trading, and today we're looking at the euro versus the US dollar. Okay, first thing I want to do is look at the YouTrading.com Forex heat map, and we can see down here that the Canadian dollar is currently the strongest currency. The US dollar is obviously close behind. The pound is weakening. The Australian dollar and New Zealand dollar are the weakest. The yen had started out this morning as one of the weakest currencies, but that's gathering strength based on what's happening geopolitically in the news. And we'll take a look at that. But euro looking weaker versus US dollar. So when we turn to the charts, we should see a depreciating euro versus US dollar. So if we look on the daily, you see here that currently today's opening price is above where we are now. So currently shorting, 1.1395 is the current price. That looks like we're going to come back down to test the 20 and the 50 daily period moving averages around the 1.136. We are in this downtrend. Overhead resistance is up at 1.15. So there is some moves to the upside that could happen. Maybe we get that after a test of the swing high and the EMAs on the daily chart. If we go to the sentiment indicator on Active Trader platform, here we can see 57% of traders on this platform are bullish. That was 65% this morning. So the news that came out today, I would have thought would have given the Euro bulls some reason to get long. If we go to the actual news itself, German ZEW economic sentiment for January came at 51.7 versus the expected 32 and above the 29.9 from previous. So that was, really bullish for the European Union and Germany in particular. EU ZEW survey expectations came at 49.4. And that's obviously above the previous 26.8. So that was actually good news. Sort of business leaders look to this next 6 months and assume that there's going to be economic growth and there's going to be a positive economic expectations, including consumer-related and export-orientated sectors, which comprise a large part of the domestic economy. So that's all good. So I'm surprised that they didn't get a bit of a bid in the euro for that. It might be down to the fact that Russia and Belarus are now talking about having military exercises in Belarus. So the drills are going to be held from February the 20th. And basically, here he says, this follows on from and provides more detail to comments from the Russian Deputy Defense Minister that they are to move forces to Belarus for drills by February the 9th. So this is probably, Europe's biggest risk at the moment. Obviously, coronavirus has been going on for a while now. Hopefully the vaccines can sort that out. But you can't really sort out geopolitics with anything but mediation or avoidance of war. Obviously, if we go to some history, in 2014, Crimea, which is officially part of Ukraine, was taken over by pro-Russian forces and then subsequently illegally annexed by Russia. So this has been going on for 7 years, 8 years now. After that happened, the UK decided to start up Operation Orbital, and that's today stepped up a bit more. We've had RAF transporter planes traveling through Denmark and Swedish airspace around Germany, avoiding Germany, through Poland into the Ukraine and dropping off basically anti-tank missiles and self-defense capabilities because the US and Europe are fearful that Russia is going to invade Ukraine. If we go to Google Earth, we can just see how that all plays out. So we've got the United Kingdom over here, top left-hand corner, airplanes flying through Denmark and Sweden. Denmark and Sweden have built up some sort of forces in their areas. We've got Belarus here above Ukraine. 2021, we had Russian troops, in the hundreds of thousands moving into the borders of Belarus and northern Ukraine. So we've got that happening. We've got Russian-backed separatists being fighting in the sort of southern east corner of Ukraine. And obviously, like I said, Russia annexed the Crimean Peninsula. So Russia's building forces around the Ukraine from nearly every angle now. They're worried that Europe and NATO are moving into Ukraine. They've explicitly said, well, the Kremlin and Putin have explicitly said that they do not want Ukraine to be part of NATO. And this is in response to that, really. So that's kind of where the risk comes in. That might be what is giving the euro traders a bit of a sort of down day after that good news, and what might be pushing traders into the yen. So I hope that makes sense, and I'll speak to you again tomorrow.